It's a difficult one right now, Steve, because we're still assessing the damage. But from what we do know, about 2.2 million barrels per day of refining capacity in the Gulf Coast is shut, mainly because we've lost power in the New Orleans area, and it does suggest that the power could be out for weeks. Some of the Lake Charles area refineries, they'll probably restart. They had shut down as precaution, but some of them, I mean, some of the refineries, and these are big refineries you're talking about, probably down for days, if not weeks, if power is not restored quickly. So that's on the refining side. And then, of course, we have 1.6 million barrels per day of Gulf of Mexico production shut in. Actually, it's 1.7 overnight now. You've pretty much got both sets going off. I think the main thing to point out from markets' point of view is to remember that US is now as big an exporter of crude oil. Obviously still imports a lot, but Mars in particular, that gets produced in the Gulf of Mexico gets exported. These get exported to Asia, and Asian refineries are going to be waiting for that crude. Similarly, for refineries, US exports a lot of products. So if that can't happen, others will have to pick up the baton, and that's generally supportive for the oil complex.
I ask what could well be a stupid question, but I'm going to go with it anyway. Apart from Carson in California, the other top 10 refineries in the United States are all in Texas or in Louisiana, with BP having Whiting in Indiana as the exception as well. Amrita, will the US always be subject to these same concerns about the ability to carry on production and refining with these huge storm surges and weather events that we see in the southern part of the country? I.e., will there ever be any change, and Louisiana and Texas will always be key?
I think it will be, also because refining has struggled so much over the past few years, hasn't necessarily been profitable. A lot of these refineries haven't been maintained to the same extent. There are quite a few refineries on the list that are currently shut, which the companies have been trying to shut down or find buyers for. So you can imagine there's been no maintenance work either. If you remember from Harvey, again, we saw the impact from that. And I think in general, a lot of these refineries belong to IOCs like your Exxons and Chevrons and big companies who clearly, as you and I both know, shareholders don't want them to be in oil and gas, and they need to be into petrochemicals or hydrogen and whatever else. So it's been challenging in any case to maintain kind of just investment. And then, of course, you've got the weather effects.
Amrita, how sensitive is the supply side at this stage, though? Because there's been a significant amount of uncertainty around the Delta variant and what that means for the demand side and just how much product some of these producers should be pumping out into the market. Now you have a big event like this. So how sensitive is the market to these swings and roundabouts?
Well, very right now, and let's not forget our our beloved OPEC meeting is in 2 days as well. They meet at a very tricky time because, on the one hand, exactly to your point, demand hasn't been as strong as anybody had or everybody really had expected. It's still doing well, it's still recovering, but you definitely had a hiccup in China. You've had a bit of a slowdown in the US. And there are concerns around that. But now you've had this kind of supply side event. Now, OPEC are meant to keep adding 400,000 barrels per day each month through pretty much next year. But, you've seen headlines over the weekend with Kuwait's oil minister coming out and saying, look, we might want to pause given the demand situation. So there's a lot of uncertainty right now.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.